Ever wondered how top investors identify the strongest stocks in the market? What if there was a way to see at a glance whether a stock is truly beating the market or just riding the wave? Today, we're revealing one of the most powerful tools in stock analysis: relative performance ratio. This metric separates market leaders from laggards and helps traders catch momentum early. And in this episode, we'll put it to the test, analyzing how Nvidia, Tesla, Apple, and Meta have performed against the Nasdaq-100 ETF, QQQ, since last July. Stay till the end, because we're going to rank these tech giants based on their strength and tell you which ones are still showing solid momentum. Chart explanation scene. So, what exactly is relative performance? Instead of just looking at a stock's price movement, this metric compares it directly against a benchmark, like QQQ or S&P 500, to show whether it's truly outperforming. Here's the formula. Relative performance ratio equals 1 plus target stock, percent change divided by 1 plus benchmark percent change. If this ratio is greater than 1, the stock is outpacing the benchmark. Below 1, it's lagging behind. Simple, but extremely powerful. Now, let's dive into real data. Nvidia versus QQQ chart. First up, Nvidia. Since July, Nvidia has shown strong momentum relative to QQQ, hovering above the $1 mark for most of the period. A sharp breakout in early February pushed its relative performance up to 1.08, confirming its leadership position in the market. Translation: Nvidia isn't just moving up, it's moving up faster than the market. Investors are showing strong confidence in its AI-driven growth, and this could continue driving upside as long as the trend holds. Tesla versus QQQ chart. Tesla, on the other hand, tells a different story. After a promising run through September, its relative strength started to decline, eventually dropping below 1.00 in early 2025. Right now, Tesla sits at 0.79, meaning it has underperformed QQQ by a significant margin. This suggests that investors have rotated capital away from Tesla, and unless momentum shifts back in its favor, it may struggle to reclaim its previous highs. Apple versus QQQ chart. Apple has been a steady performer. While it dipped below the benchmark briefly, recent weeks have shown a rebound, bringing its relative performance back to 1.08. Notably, this is a strong sign that Apple may be regaining its leadership, potentially making it an attractive hold for long-term investors. Meta versus QQQ chart. Meta started strong, with a dominant performance in the latter half of 2024. But recently, the trend has shifted. Its relative performance has now fallen to 0.94, meaning it's underperforming QQQ. While it's not as weak as Tesla, it does raise questions about whether the stock's momentum has peaked. Side-by-side stock comparison. So, how do they stack up? Nvidia and Apple are showing the most strength, both sitting above 1.00. Meta is slipping, moving into underperformance territory. Tesla has struggled the most, significantly trailing QQQ. If you're a momentum trader, Nvidia and Apple are stocks to watch. But if you're looking for turnaround plays, Meta and Tesla could be opportunities, if they show signs of bottoming out. Want to check how your favorite stocks are performing against key benchmarks? Head over to alphastockai.com, where you can analyze relative performance in real time and spot market leaders before the crowd. If you found this insight valuable, hit that like button, subscribe for more stock analysis, and let us know in the comments, which stock are you watching next? See you in the next video.